Welcome back, folks. We get the S&Ps negative by 3, NASDAQ negative by 10, Dow barely red right now by 70 points. And right now, folks, as we do each and every Monday at 3:15, we're going to jump over to our man Steve Rhodes. Folks, you can check out Steve Rhodes' outstanding daily program, The Trader's Edge, 11 a.m. every trading day, and his daily newsletter, Mastering Probability. Check it out under the newsletter tab. You can subscribe. Folks, we always say you get a 30-day money-back guarantee. If you haven't done it, head on over there, check it out. You can sign up for the 6-month or the year. They all come with a 30-day money-back guarantee. You get some great webinars in as well, and you get Steve in your corner every single day. Steve Rhodes, good afternoon. Oh, I think I got you. Go ahead. There.
Can you hear me? Can you hear me okay?
We got you loud and clear. Steve, how's it going?
Oh, perfect. It's going great. It's a great summer. Hey, look, we got Labor Day in 2 weeks.
Isn't that? It's wild, man. You know what, Steve? They had a Falmouth Road Race this weekend, which is always a beauty. And it's like, man, the summer's flying because that was almost the end of the summer, and Labor Day so early this month, this summer. Time flies, as we know, and this market is flying, man. We got
it was flying on Friday, and that's what I wanted to chat with you about, chat with the listeners about, which was last Friday. We finally had the Dow make a new all-time high. The S&P 500, the NASDAQ had done that much earlier. In fact, the Dow, the new high that it put in, the last time that had a high was December of 2024. Most people don't realize that. So we did get to a new all-time high on Friday. However, there's a however here. If we take a look at this set of charts, you'll see on the left-hand side, you see the daily time frame. There's no topping pattern there, but the weekly and the monthly still retain their top out here. The weekly has a sell the D point top. The key number there is 45.016.77. Those folks that are watching us on the YouTube channel or obviously inside the Tiger's Den can grab a snapshot of this picture. These numbers are not going to change. The monthly chart has a Rhodes Momentum Indicator top, and that needs a close above 45.073.63. So there's still tops that are in place, even though we did hit a new all-time high. And again, the daily chart needs a bearish reversal candle. Unfortunately, the other thing, the Dow's new all-time high only occurred in terms of U.S. dollars and Chinese yuan. So this chart here, Tommy, converts the Dow price. So I have it priced in euros, yen, Australian dollars, Swedish krona, the Great British pound, the Swiss francs, Chinese yuan, and the Canadian loonie in there. And you can see that I've got also trend lines. If you take a look at the euros, we're way away from the all-time high in terms of euros. The same is true in terms of yen. You can see prices rallied right up into a resistance level, a prior trend area. The same thing with the Great British pound out there, the Swiss franc, the same thing. So we're up at resistance when we take a look at how the Dow is priced in other currencies, and that's really important. It's if we only think in terms of ourselves, well, we're a little bit selfish there, but we're not getting the real picture of the market. Here's an example. The best rallies unfold when price moves higher in all currency of whatever instrument it is that you're looking at, whether it's gold, whether it's oil. In this case here, what I wanted to focus on today was the Dow. This chart takes us back to the 1980 time period and runs us up into the 2000 top. A lot of people call that, the dot-com bubble. What people don't realize was also going on there was money, there was capital that was flowing into the U.S. and out of Europe. And that's shown here with the rise. The chart on the right-hand side is the Dow priced in euros. The left-hand side, just the Dow from back in 2000. So we flash forward to where we're at today. We can see how the Dow, we're up, we're making, new highs, new all-time high out there. But just recently, in terms of dollars, we are not making the rally has stalled, and that's a message. It's a real caution sign out there for us to take, because what this is telling us that the rally is actually more domestic than it is international. And again, the best rallies, Tommy, and everybody else out there, are when the instruments are moving higher in all major currencies. Then it is a real party out there.
That not to jump in, that Euro chart is something else, folks. If you didn't check it, go check out the archive. That is an amazing chart that I think nobody knows, Steve. I'm in this market like you every day, and that blows me away, that Euro chart, how far off. But guess what? It makes sense. The dollar's gotten clobbered, man. And so it's just, I think it's great information because it makes sense.
No, it's really helpful because what it does is we're all trying to put the market together. And if we only are myopic and only looking at one instrument, we're really going to miss the picture out there. All the discussion, what frustrates me the most perhaps is all the discussion about tariffs and nobody's talking about the floating exchange rates we have out there. You can't talk about one without the other out there. So that's a whole nother subject. I don't want to really get into that.
Totally.
But, like you're talking about the dollars, the strength or the weakness. And so they've got to incorporate the whole picture, which is really what I try to do during the Trader's Edge show, try to do with you, doing the newsletter. This chart here happens to be a daily time frame chart that shows the 4 different instruments that I use for tracking the Dow. In the left-hand corner, you've got the Dow Equity Future Contract. That's especially helpful because of just simply having access to so much data. We've got almost 24 hours worth of trading. I'm a pattern recognition trader. More data is better data. If we look at the Dow Jones Cash Indice, which is right next to it, again, no top there. There's no top, by the way, inside the Dow Equity Future Contract. Not yet. The same thing holds true for the Dow Diamonds out there. But when we take a look at the equal-weighted ETF, and as I try to point out to viewers and listeners, oftentimes it is the equal-weighted ETF that is really telling us the story. And the equal-weighted ETF on Friday generated a Rhodes Momentum Indicator top. And today, it's going to go ahead and form a TD9 count top. Now, Friday's Rhodes Momentum Indicator signal, Tommy, a close above 39.28 will negate that signal. Doesn't matter. You'll still have a TD9 count top. So the equal weight right now, until we get rid of no tops, until it negates those signals, another reason to be cautious. And it's not just the equal weighted ETF for the Dow. I know that's been my main focus here this afternoon, but this shows us the equal weight for the S&P 500. That's the center one, RSP. And then we've got the QQEW on the left-hand side. That is for the Qs out there. We know we're at new all-time highs for the Qs, but we've got a TD9 count daily top inside the QQEW. We've got a Rhodes Momentum Indicator top inside the equal weight for the ETF. So the equal weights right now are flashing a sign to be careful. Not that these can't get negated. They obviously can. But we've got caution signs out there. And so it's not just looking at even international markets or how things are priced in currencies. It's trying to understand even how our markets are priced with these equal-weighted ETFs. And they're really helpful, and I suggest that people take a look at it. Nice. Lastly, this is a chart of the Dow. For a weekly time frame. And this uses a lot of Bud Rolf's tools. This shows the horizontal trading ranges. Those are the green lines that are going across. And then we've got the diagonal price channels out there. And what we can see is price right now is up against a diagonal price channel. The interesting thing here, Tommy, is the price channel that I drew in was off of the 2009 lows to, capturing this first area out there.
I love it.
And once you capture that first area, you just are multiplying the exact same distance to get those other price channels.
You can see how cool it is on that chart, right? Steve, right? It is. I love it, man. Totally.
It's nothing that was like, tried to force it or anything. It just is the way that it flows. And if we take a look at this, is I apologize, this is actually a monthly chart for the Dow, but this is now the Dow's chart priced in euros again. And so we can see how this is actually sitting right here at 38,601. That is a trading range boundary line. So we're up against resistance inside the Dow. I just wanted to point that out to you. Seasonally speaking, during a post-election year cycle, we typically top around August 2nd. This is 10 days away. We're still inside the range, I believe, and then we head lower into the November timeframe. We don't follow this analog pattern and we start busting out to highs, then we probably move higher into the beginning, first week of September, Labor Day.
That was some great information, man. I love the seasonal aspect. It would make sense. I love how just it makes sense so much anyway. It's election, right? You come in with all that acceleration, the momentum, you make it through the summer, and then it's like, whoa, where are we now, right? And here we go.
Absolutely.
Steve,
Absolutely.
Great stuff.
What we want to tell folks is just simply there's a yield sign, there's a caution sign. It's just time to be careful.
Get in there for Mastering Probability, folks. Check out Steve's newsletter. Steve, we look forward to the show tomorrow, man.
Thanks, Tommy.
Thank you. We'll be right back.